Positions. We have a long position. When we choose a long position, right, we're anticipating the base currency pair in specific to rise. So if you're setting a long position on Euro USD, you are anticipating that the euro will rise against the United States dollar. So short position is basically the opposite of a long position. So short position, we're anticipating the base currency to fall against the quote currency. So the base currency being the euro. So we're anticipating the euro to fall against the United States dollar. And then after we have experienced profit, or we just want to close a trade, we have the option of closing a position. So we close this position when time has passed and if the price has changed according to our expectation. Those are basically the main types of positions that you need to know when getting into Forex. So now we look at the main types of orders. This is basically a bit of repetition, but this is based on the buy and sell. This is a long position or a short position, buy or sell. So we have market orders, that is the buy and sell. These are designed to open positions at the current market price. The position will be opened immediately after you place such an order. So if you see the Euro USD and it's at 1.16, you place a buy at 1.16. Depending the spread, that your trade will be executed instantly at that current market price, depending the spread once again. So we have also pending orders. These are very useful if you're not in front of the monitor or so forth. So these allow you to choose entry levels in advance. In this case, the trade will automatically open once the price level that you have chosen is reached, and you won't need to be in front of the monitor when it happens. We'll look into that right now because we have all types of pending orders. So these types of pending orders we have. So we have sell limits. So if you anticipate the price of a currency pair will rise and then reverse to the downside, place the sell limit above the current price. A sell limit, we're anticipating the price to go up, and when it reaches a certain level, normally we use support and resistance for these kind of sell limits and so forth. If you have the sell limit, we are going to place the sell limit above current market price, and when it hits that market price, our trade automatically gets entered. So we have a sell trade automatically entered when the currency pair reaches that price. For example, let's say we were trading Euro USD at the current market price of Euro USD is 1.15, and we're expecting it to rise to 1.16 before starting to go down. So we place a sell limit at 1.16. That's basically it, plain and simple, guys. Alright, so we have now a buy limit. It's just like a sell limit, but with a buy limit, if you expect the currency pair to decline and then reverse to the upside, place below the current market price. So if the market price of the Euro USD is 1.16 at this point, we expect it to go down all the way to 1.15, for example, and that's where we'll place our buy limit. Our buy limit will be on 1.15 before it rises back up. Alright, and then now we have a different type of pending order. These are what we call buy stop and sell stop. So let's look into sell stop for now. So sell stop, if you think the selling will intensify once the price breaks a certain level on downside, place below the current price. So what we're saying is that if the current price is 1.15 and we're expecting the price to drop to 1.14, if it gets to 1.14, we're gonna be like, all right, this is definitely continuing to go down. Currency pair is gonna continue to go down. So we'll place a sell stop at 1.14, anticipating it to continue going down. That's a sell stop, guys. So you have to differentiate between a sell stop and a sell limit. Sell limit, we're expecting the price to reverse. So we expect it to go up and then go down. That's a sell limit, guys. And then a sell stop, we're expecting the price to continue going down. I hope we're clear there. With a buy stop, if you think that the buying will intensify once price breaks a certain level on the upside, place the price above the current market price. Sorry guys, it has buy limit here, but it's supposed to say buy stop. So if you just think of it as buy stop, this is buy stop we're explaining here. So buy stop, we're expecting the rise of the currency pair to continue going up. So if the market price is on 1.15, we expect it, if it gets to 1.16, we're saying it'll continue rising. So we'll place our buy limit on 1.16. So we'll look into the practical way of doing all these in our other lessons to come. Now another aspect of pending orders that automatically happen. So you don't have to be necessarily in front of your monitor day in, day out. Okay, so we have take profit. You have to pay attention here guys, because if you use things like Forex signals, like we use take profit, stop loss, they are very, very important. Every trade must have at least a stop loss or a take profit. So let's get into that right now. So take profit, you might know it as TP. TP meaning take profit. So in order to close a profitable position, we place a take profit. So if the buy limit gets executed, for example, it automatically gets entered at 1.16, and then we're expecting it to continue rising, right? So if it continues rising, we have a certain level that we expect it to touch, and that level is our take profit. So we'll say 1.17 is where we expect it to touch, and when the price reaches 1.17, the trade automatically gets closed. So you take your profit straight away. So now we have a stop loss. A stop loss works in the same manner as a take profit, but in this essence, a stop loss will stop you from losing money. So in order to close unprofitable positions, so if the trade doesn't go in your way, it touches 1.16, but it starts falling and you have a buy position, our stop loss is there to stop and cut our losses. It's very, very important guys. So you have to know how to place a stop loss and where to place it, because that is very, very important. Sometimes it could even just retrace back, the price could just retrace back a little and then continue rising in your favor. So you have to know where to place a stop loss. Stop loss, on top of that, it protects you from losing so much money. Like, news can really make a strong impact depending what kind of news on the currency pair. So all of a sudden you see we had, let's say we didn't anticipate the Brexit news, and then all of a sudden we have a buy on the GBP USD pair. Fell and it fell and it fell. You would have lost so much, as compared to if you had a stop loss, you would have lost just $30, let's say, for 30 pips that didn't go in your favor, compared to the massive loss of, I don't know, 200, 300 pips. So now we're looking into calculating profit and loss. Alright guys, okay, we're going to use examples like the GBP USD. With US dollar pairs, a mini lot of 10,000 equals $1 per pip. Okay guys, so if you just stick with me here, just good to know this information on calculating profit or loss. But usually most brokers, platforms, or the MT4 platform, they automatically tell you as a trade is happening, like how much you are in profit or how much you are not in profit. We'll just look into how it works in case you're just curious. So what you should know is that 1 pip equals 1 USD per 10,000 lots. Okay guys, each pip that the market moves is either, if it's in your favor, you're gaining $1 for your 10,000 lot, if it's in your favor. If it's not in your favor, you're losing $1. So okay, we'll take for example, let's say you bought 20,000 lots of the GBP USD, and each pip, this means that each pip in movement of the market price change equals $2 that you're gaining or losing. If it's in your favor, you're gaining $2 per pip. So if your target is, let's say, 10 pip of the market change, then you gain $20. So you should just calculate using that. So if you want to make $2 per pip, or know you're entering a trade where you want to make about $20 and you know it'll make only 10 pips in movement, then probably you would buy 20,000 units or lots of the GBP USD or the Euro USD. So for example, you buy 10,000 lots of the GBP USD at 1.16. We're looking into this practically now. And then you close those 10,000 lots at 1.165. That means that there was 50 pips in movement, and each pip equals $1. So that's 50 pips times $1 equals $50 profit. And